Hello friends, today I tell you what are assets and liabilities. Assets and liabilities are key component in understanding the financial position of an individual business or organization. They form the foundation of the balance sheet, one of the most important financial statements. First, assets. Assets are things you own that have a value. They can generate cash flow, reduce expenses, or be sold to generate money. Characteristics of assets: ownership or control. The entity has rights over the assets. Second is a future benefit. The assets in expected to provide a economic value in the future. Next is a quantifiable. Assets have a monetary value that can be measured. Type of asset. First, current assets and another is a non-current asset. First, we see current asset. Short term can be converted into cash within a year. Cash and cash equivalents. Money in the bank and physical cash. Another is a account receivable. Money owned by customers. Inventory. Raw materials, finished goods ready to sell. Remarkable securities. Short-term investments. Second is a non-current assets. This is a long-term held for a more than a year. First, fixed assets, buildings, lands, vehicle, machineries. Next is a intangible assets, patent, copyright, trademarks, goodwill. Another is a long-term investment, just like a stock, bonds held for future return. Another is a liabilities. Liabilities are what you owe to others. These are obligations that must be fulfilled through payments or services. Characteristics of liabilities: settlement in the future involve the use of cash, goods, or services to settle the obligation. Legal or contractual obligation arises from past transaction or agreements. Next is the reduce economics benefits. Liabilities reduce the net value of an entity's resources. Types of liabilities. There is also two types of liabilities: current liabilities and the non-current liabilities. First, current liabilities. Current liabilities is a short term due to within a year. Accounts payable, money owed to suppliers. Short term loans, borrowing repayable within a year. Accrued expenses, that are wages, taxes and interest that are owed but not at paid. Second is a non-current liabilities. Long-term due after a more than a year. Long-term loans, bonds and large debt. Another is a tax liabilities. Taxes that are owed but will be paid in the future. Next is a lease or pensions obligation. Payments over a long period. Importance of assets and liabilities. First, financial health indicator. The balance between assets and liabilities shows the financial strength of an entity. Liquidity analysis. Current assets versus current liabilities measure the ability to meet short-term obligation. Third is a profitability and growth. Long-term assets and liabilities influence long-term growth strategy. Risk management. Higher liabilities than assets may indicate financial risk. The formula of asset financial health: net worth equals to assets minus liability. Debt to asset ratio is liability divided by assets. Current ratio equals to current assets divided by current liabilities. For example, take a imaginary company, name is a XYZ. The company assets is a $5 lakh, just like a cash, property or equipment. And the another is a liabilities of this company is $2 lakh, just like a loan, account payable. So net worth equals to $5 lakh minus $2 lakh equals to $3 lakh, means the company net worth is a $3 lakh. Understanding these help in making investment decision, securing loan and assessing business viability. Thank you.